Good morning, everybody. It's 7:30 a.m. New York time, London lunch. It's Tuesday, February 17th, 2015. This is your daily Forex trader strategy session. My name is Wayne McDonald, Chief FX Market Strategist for TradersWay.com. Thank you for attending today, and hopefully you can attend tomorrow. Today I'll try to cover everything. As the slide shows, let's do some Forex, some energies, metals, indices. If we want to do some scalping using binaries, someone wanted to do some scalping. Oh yeah. So we could either do that trading the spot market with a scalping strategy, or we could scalp with a binary, which might actually even be better. But either way, why don't we go through every single currency pair we can over the next 45 minutes or so? Sound good to you? Sounds awesome to me. Let's get her done. Remember, trading and investing is risky, particularly with leverage, not appropriate for everyone. Past performance on a demo account does not predict successful results on a live account, so never risk money you cannot afford to lose. Let's go through the whole thing. Let's start with Aussie. Did you guys read the RBA meeting minutes? Yeah, well, I did. So anyways, it was a closer call than people had thought. They weren't 100%. Well, it was a close call on whether they should lower interest rates like they did. And then the second part was that as interest rates come down in Australia, people are plowing money into the housing market. Whoops. And it was already red hot, right? So, maybe it's just people doing a refi. But anyway, so there's a red flag over there because they don't want a housing bubble. Remember what happened after the dot-com crash in the United States and interest rates dropped to 1% under Greenspan? What was the result of the housing bubble that eventually blew up the economy again? So they're watching that with great concern. So who knows? Maybe they don't want to cut interest rates, or again, maybe they don't want to lower the Aussie any farther than 75. Remember, they told us it was worth 75, so it dropped to about 76.50. Also, the point that I want you to understand here is when you get near 75, when that was the RBA target for the valuation of the Aussie dollar, what happens is some of the market participants say, all right, there's a limited downside of only 100 pips or so, and an unlimited upside. Some people will try to stem the tide, trade against the prevailing trend. Now, in this case, the first shot, it's hard to call. Then we notice how we had it consolidating. Then you notice how we had the trade plan to break out. I don't remember why we didn't make it have a lower low, but nonetheless, you notice how it's consolidated again? So this is a problem if you're a trend trader. If you're a trend trader, we were supposed to make a lower low. Okay? We didn't. Does that mean the trend worked? No, not necessarily, but it's definitely out. Could the bulls get into this game, take it up higher, and then make a higher low? Yeah. So go from bearish to neutral is all I'm suggesting here. Because technically it's not bearish anymore. Technically it's not bullish, but technically it's not bearish, and that's why it's range bound. Okay, so ease up on the throttle, my friend. Okay. Could this go all the way back to 80? Yeah, you know what? Just go back into recent past, even though past performance does not predict future results. Understanding the past never hurts. And what happened in the past is we got near a similar target set by the RBA, and then it had a massive retracement, massive. And then we made a lower low. So could this go all the way up to 80, 81? Yeah, you know what? Totally could. Am I suggesting it will? No. But be prepared for it. Don't be too silly, right? So for example, this upper orange line clearly is potential resistance, correct? Correct. So if it's going to play the range, it should at least fall to this level, at least. Ideally to the lower level, right? So what happens though if it heads up even higher than that? I would back off big time if I was a bear. Go find something else to do, right? Okay, we're just kind of getting ready to test a pretty important level of resistance. Well, what's my job as a bear? Wait for price to get to resistance, look for opportunities to sell, ideally reversal patterns on smaller time frames. Good, well, keep that going until that fails. You could count that as resistance, and the one higher up is even more important. Okay? How are the oscillators? Overbought? Maybe diverging? Okay, would you pull the trigger here on a 4-hour chart? No, way too slow. On a 15-minute chart? Yeah, you could. Why? Well, you're at your gray zone, so you know it's resistance, and you got a 5A cross in here. However, is it bullish? No. 21 is above the 55. Technically, or I meant to say, is it bearish? No, so it's not a good sell yet. It's pretty aggressive. The market is bullish because the 21 is above the 55, and there's pretty nice angle of separation between the two. We've consolidated, made a higher high, higher low, which is a 1, 2, 3 off of this level. Pretty easy long if you're a bull, right? Time that with the London Open, easy if you're a bull. Now it's come up. So what's the plan now? Well, a bull is going to buy down in here. Okay. If they fail to buy down, then it's going to come down to this level and then almost consider it like a hedgers type thing. Okay, if you're a bear. Okay, if you're a bull, you need to buy off that 21. Okay, with a target of the monthly central pivot point, which is just below 80. How does that sound? Any questions? Everything good? Yep, white. Thumbs up. Give me a thumbs up. Well, Zeal, what it means is if you short now, you do have a 5A cross, you are at resistance, and you're a bear. It's a bit aggressive. The better short, or let's say less aggressive short, would be over here. Okay? Okay? Here is fine. It's just really aggressive. Make sure you're that aggressive. Match up your expectations with reality, right? So going back to the 4-hour chart, could this go all the way to the central pivot point? The monthly central pivot point? Yeah, it totally could. So blindly shorting here would probably be high risk, low reward. Unless it matches your true attitude for this market. If you look at this and you say, I just have to short it, then you've made a decision. That's fine, because I don't know if this is going to fall here or go up. So make sure you match it with your true attitude, with your true bias, right? Remember, it's not just colors on the chart. So is that real resistance? Yeah, sure. Is the market bullish? No. Is it bearish? No, it's not either. Right? So ideally what you do is you sell the best or the most aggressive levels. So I'd rather I'd rather have a sell zone up here kind of thing. Okay? That's where I would rather sell. But is this real resistance? Yeah, it was in the past, could be again. So then you drop into a 15-minute chart. Is it ready? Well, you got a 5A cross, which is the trigger, but technically it's still bullish. So you could wait for the 15-minute to go bearish, which would take about 4 hours, right? 2 hours down for a stochastic cycle, 2 hours up for a stochastic cycle. So 4 hours from now, right, let's say the New York close, maybe baby. Okay? Just make sure everything lines up. Your bias lines up and your behavior, your trading strategy is lining up with your actual bias or attitude for the market conditions, okay? Calhan's thinking weekly R1. Sure, why not? You want to look for overlaps of weeklies, monthlies, and dailies, psych levels. Okay, but boy, call it what you want. If it's resistance, it's resistance. All you need is resistance, right? And then a reversal pattern. So that's why I'm like, is this resistance? Yeah, you could call that resistance. Okay, then you drop into a 15-minute chart. Is this a reversal pattern? Well, we have a 5 cross down, but that's not necessarily a reversal pattern. Okay, 100% retracement, then on a high off of the shoulder, that's a reversal pattern. Okay? I think there's going to be a lot of bulls in the market, and that's a pretty easy buy off the 21. Next. Okay, Greece. All right, still a problem. Still a problem. Yep. So what do you want to do with it, huh? You know, still looks like a big pullback to me. Still going to treat it consolidation, you know, is sort of the market conditions that I see. Okay, if you recall, boy, quite a while ago, we had this set up where this is sideways. You could have it kind of here where we are at the top blue line, or even the monthly. Right, I guess I'll mark it with an orange line, right? I don't want to buy it. I don't want to sell it. But if I was forced to do something, I would sell it. Weekly R1 is okay, but I'll tell you what, the better resistance, in my humble opinion, is the monthly central weekly M4 cluster right around 115. 115 to me seems to be a psychological level. What do you think? Okay. Now 114.50, sure. It's probably worth a shot, especially if you're going to scalp it off of a 5-minute chart, right? That's different. Scalping's different. You're just selling it off resistance for short-term profit. Fine. So you scalp it off there, maybe lucky. Okay. But I think higher up is better for a spot or even a swing trade. Okay. So yesterday was a holiday in the United States. That's why we didn't do a session yesterday. So wouldn't it be nice that, let's say 115-ish turns out to be the top of the week? You sell at 115 and this thing drops for a week or two. Now, a daily Stokes doesn't suggest that. Okay. But maybe that's your attitude. Okay. What does the daily Stokes suggest? The downtrend is slowing. Okay. And the 21's in control here. So if we're going to fall, I'd like to fall pretty soon. It wouldn't bother me to have a little spike. So let's say maybe today or tomorrow. Let's say tomorrow. This thing spikes all the way up to the weekly M4, monthly central pivot, and then immediately drops like a ton of bricks. Cool. Do I want it lingering up here? No, because then what will happen is candles will close above the 21, which will kill the 21 for me. And that'll put the 55 into play, and that just means up for a while, sideways for a long time. But I'm not ready to drink that Kool-Aid yet. Okay? So ideally, actually, it'd be really nice. I don't expect it, but wouldn't it be really nice if it just headed down now off the 21? Yeah, that'd be really nice. I don't think it's going to happen, so let it go up a little higher. I want it to be a fairly quick move and back down at least to the bottom of the first range or the second range, or best case scenario, lower. Okay? Any questions about that? I don't mind visiting in this area, but I don't want to stay long. Okay, looks like we're good. Next. Piggy, 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 can't you see? All right, UK news. Did you guys catch the UK news today? Yeah, not very good. So the UK is still not giving us pretty good numbers. What did Carney say about that? Okay, UK CPI almost down 1%, negative 1%. Obviously not good. Okay, yeah, he said forget about it. You know, he said it's all short term, don't worry about it. Well, I think somebody's worried about it. But that's what he's saying anyway. And that drove up the value of the British pound. Okay, if you look at it on this level. Okay, so we're on the 4-hour to 1, but we already touched it and it's supposed to be making a higher high. It failed to do that. I'm a little concerned about the price action here, but the oscillator says this should head up really nicely now. This is supposed to be making a higher high. Okay, that's what the oscillator is saying. It should have done it a few hours ago, you know, actually a couple of candles ago. So it's not behaving properly. A buy opportunity could be off of this low if it does make a lower low. Okay. The other way of looking at it is you take a Fibonacci from a high to a low. Why would you do that? Because it did make a higher high of this high. Okay. That's what the other, that's what the chart was telling us before. Let me explain it this way. Oops. That didn't work. So I just moved a trend line, which I had showing us a higher high, and we have a fib. You see the fib there? There's two fibs. One was measuring a fib from this high to that low. Okay. Okay. This circle was higher than that circle. So you take this high and the low and make a Fibonacci. And we made a gray zone. You see it? What used to be resistance is now support. So it did come down. It make a 382. It did bounce. Then it made a higher high. So now you do the whole thing over again because we're in a trending market in that scenario. We were talking the other day when we were not trending and people were using Fibonacci. I'm like, no, 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 no. You're going to lean more on oscillators in a range-bound market than you are on Fibonacci, because for Fibonacci, you're going to need a trend. So, oops, that would be the potential entry. What I'm supposed to be marking first is this. Okay. That's what we're looking at. So what happened last week was we were in consolidation mode. Then a higher high. As soon as it's busted out where it made a high above the resistance, you would fib that, buy it somewhere between a 382 and 618. In this case, it just came right down into the first level of resistance, but now it's support because of a roll reversal. Then it made another higher high relative to the previous high. So you'd fib it again, expecting what? A higher low. Off of what? Well, ideally somewhere between the 382 and 618 Fibonacci retracement, off of a roll reversal, off of a psych level, off of a mean average. Looks like this is really going to come down, maybe kick off the 55, the way that it's behaving. The oscillator is ready for it to head up, but those candles don't look very bullish, do they? And maybe it's just that concern is finally kicking in at the New York Open. The concern about the CPI being negative. That's not good, especially if you're bullish on a currency. It's not good. So why is it trying to turn up here? Okay, and we got this last week. We're at an epic support zone. Going back, February 17th, 2013. Hey, it's February 17th, 2015. Yeah, 2 years ago we were here. What a trip that's been, huh? All the way up, all the way down. So, maybe start cycle again? Maybe. Did we get the price action to suggest that's possible? Yeah, actually we did. So that's where you get the higher high, higher low, higher high, higher low, double top, double bottom, higher high, higher low, higher high, higher low, higher high. You see the change, right? Lower low, lower high, lower low, lower high, lower low, double top, double bottom, higher high, higher low, higher high. What's going to happen next? I don't know. I'm going to guess higher low to a higher high. So decide what you want to do. Do you want to keep selling it? It has fallen all for about a year straight now, right? Good. So what would your trade plan be then? Find resistance, right? So I would mark this up if I were me. Okay. And the thing you could do is fib off this bottom to this top. And it's about the same. So it looks like you're going to be interested right about where we are, a 618 to 786. Okay. Okay. Questions? Talk to me, Goose. Yeah, Justin, I do, but I'm expensive. Yeah. Yeah. I have pesos. Hey, by the way, quick pop quiz. Who can tell me why sign for the US dollar is an S? Does anybody know? Yeah, Milan. 1, 2, you rock. Milan is actually correct. It's actually silver pesos. Because silver was prominent in throughout the Americas when the Spaniards were running business, raping and pillaging and stealing and spreading disease and killing off everyone that of the indigenous people and stealing their silver. But anyways, so silver was the currency. It was silver pesos for currency in the Americas. And over time, for various reasons, yada, 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 it was, everyone knew it was pesos because everything was pesos. And then it was just silver. So they could denote how many pieces of silver pesos, or just silver, heavy. And it was heavy silver too. Heavy. Big silver peso coins. So you just have this asked maybe for silver, I don't know, 2 lines through it, and it just meant silver pesos. Cool, Milan. Student of money, huh? Justin, just stick around. When we're done with the session, I'll give you my email address. I'll see if I can help. So anyways, looks like we're all good. By the way, Milan, are you one of those guys that has tons of useless information in your brain? Or have you studied it for a particular reason? A history buff? You're a currency buff? Looks like out of all the people in the room, you're the only one that knew that. It actually goes even farther back into Europe when people were carrying gold around. You didn't need much gold to buy things. So you had these little tiny pieces of gold. And then the next thing that was worth something was silver, but gold was worth a lot more than silver. I think it was like the Czechs, whatever part of the world that was at that time, but Czechoslovakia, Czech Republic, Slovakia, that kind of part of the world. That kingdom had tons and tons of silver, but had no gold, so they started making their own silver coins. And one big, heavy silver coin was worth the same as one of those tiny little pieces of gold. So people just preferred to carry the silver around. Anyways, you got to love what you do, man. I'm telling you. Yeah, I even went to Chengdu, Western China, where it was the first forwarded place to use paper money, paper currency. All right, so that's the pig. Anyways, looks like everybody's happy on Pig Dog. Kiwi. Okay. Looks like we had a little breakout. Look at up, down. Try it on a 1 hour, huh? Check that out. Isn't that nice? Just like we saw in the other currency pair. Breakout. What do? You fib it, right? Long and gone. Look at that. 382 retracement predicts what? Actually predicts 1618. That puts us at 76. Cool. Okay. You see that, guys? The breakout, the retracement, and then the retracement, because it was a 382, predicts a 1618. That puts us there at 76. Okay. So then what? What happens price action wise? Oops, I don't want to get rid of the. There we go. What happens next? What used to be resistance becomes support, right? So it makes a new higher high. Look at this, guys. Boom. Higher high, higher low. What used to be resistance, now support, gone. Rinse and repeat. What used to be resistance, all right? Maybe we come back and tickle that. Who knows? But that's what you should be doing over and over and over again in a trend trade. Higher high, right? Higher low, higher high, higher low, higher high, higher low, higher high, higher low. Notice that things can get tricky, and where I think inexperienced traders get caught, and what I mean by inexperienced, let's say 5 years of trading or less. Now, why would I say 5 years? Well, because the markets go through an ebb and flow based on macroeconomics that can be 18 to 24 months, 18 to 36 months really apart some of these things. And so a lot of traders can come in, and when the dollar is strong and all they do is buy the dollar, they make a lot of money. And then for, let's say, fundamental reasons, the dollar starts to weaken, but they're not on the clue train, and they keep buying dollars and they give it all back. Or you do that even on a smaller time frame when the market's moving. Let's say like from August to December, it was moving very, very well. The fish were jumping into the canoe, and you're like, I'm the greatest trader in the world, I'm making all these pips. Then we have, the normal pullbacks and stuff we have in January and some consolidation, and you give them all back. And what happens? Well, you don't see the change in market conditions, and you keep doing what you used to do in the old market conditions, right? An old timer like myself, we expect the market conditions to change. You're always on the lookout. Okay. Now, here, let me give an example here, because I talked to a few people last week and the week before, and they gave a lot of pips back. And they're like, oh, man, it's so tough. I'm like, no. You're trading in a range-bound market. And you get one of these things, right? It looks like it's trend trading. In fact, pull back and lower low. Let's just skip that. But then it makes this massive pullback, and then you keep trend trading instead of range trading. Or in this case, trending down, consolidating, and now trending up. Okay? Forever? Well, I don't know about that, but we know where resistance is probably going to be, somewhere in there, right? So maybe up into there. That's the $1 million. Well, that's why you need to do some analysis. So we're at the 50% retracement now. I'd get more worried around the 618, as you can see. I already have it marked out. But this is something you should always be asking yourself as a trader. And I don't care if you've been trading for 22 years. You still ask yourself very basic questions like, all right, Kiwi dollar, am I a bull on this or a bear? And then the second thing is, what are the market conditions? What are the market conditions? Is it trending or is it consolidating? Right? And you look at this and say, okay, well, maybe I'm still a bear on this, but technically it's bullish, so I think I should be cautious. Therefore, I should look for the high levels of resistance, the key ones, the ones that even a blind man can see. So then, you let it trend up in there, and you're like, okay, well, maybe around 77-ish, I might be interested, perhaps 76.5. I might look to sell that again, and you back off. Or you say to yourself, right now it's making a series of higher highs and higher lows, so I'll be short-term long until we get to that 77 area, and then I'll look to, stop and reverse. One or the other, right? But you're analyzing the market conditions, not just your bias. Maybe you're not big enough to move the market, right? So if you were a bear, okay, let's say you were bullish on the US dollar, bearish on the Kiwi. That's plausible. Okay, that's not crazy talk, right? Then I look at this, should I be selling? No, it's trending up. And a lot of traders will just keep selling this. And they're like, well, Wayne, you told me to sell it 4 weeks ago. Well, dude, the world's changed in 4 weeks, right? So you always look at the market conditions. And the reason for it, and the trick to it, the reason it's difficult, is you see what you want to see. It's called confirmation bias. Perception creates reality, is what Friedrich Nietzsche said, right? So, you're going to see lots of opportunities to sell. What you need is a moment of clarity and say, well, why would somebody sell this if it's making higher highs and higher lows after a breakout of consolidation? Well, somebody's buying this, my friend. Okay? So wait for it to go up, wait for it to reverse, and then contribute to the new downtrend. Or just watch it completely reverse, even go through here and look at it and say, oh my gosh, Becky, I almost sold that all the way up, but I backed off and I didn't, and I am so glad. Right, Becky? All right. I think if I were a bear, I think it'd be interesting to sell up here. Right? But here, the 50%, okay, well, I get it, it's a 50%, but anything else? Any other reason? Is there a low? Is there a 5-8 cross? Is the MACD below the waterline? I mean, what do you got, my friend? Nothing. A whole lot of praying, maybe, right? So I would say short-term long to long-term short. Okay? If you said to me, well, I want to take it off of a pivot, then great. Put that part of your plan. Okay? Are we at the pivot? Nah. But if you wanted to take a shot up here at this cluster, be my guest. Put your pips to the test. Okay? Next. Kitty CAD. It's also in a commodity recovery, isn't it? Okay? So we have it coming up and then down, and it looks like it took a week longer than we thought. Sorry. Clear this up a little bit. Okay? Can you see? Up. So it came down, then it came up, and then we have it coming down. And I believe the orange line is suggesting where the 200 EMA would be. Didn't even make it there. I thought it would come down, hit the 200 EMA, so on and so forth. So what do you want to do with this? It's decision-making time if you're a bull. Okay? Are you a bull on this pair, which means bear on the Canadian dollar? Then you need to wake up and smell the coffee. Okay, you're at a monthly pivot, weekly support pivot. Okay, and you already have the stochastic oscillator trying to jump. Okay? And if you're a bear, you're at support, so you can't sell. Okay? So at the very least, I would look at the market like this. I know that's hard to see, but I have stuff. Okay, at the bare minimum, let's see if I can do this without it deleting. Boop. At the bare minimum, I would look at it like that. Okay, the blue lines being the new range. Capiche? Next. Yen. Little hesitation out of the Bank of Japan, huh? Boo. Probably related, you would think, to repatriation. Why would you try to throw a bunch of money knowing... You're right. Put it this way. Let's say you're the Bank of Japan. Do you think the Bank of Japan knows that the seasonality of the yen? Yeah, probably, right? You would think, right? So would you throw down a whole bunch of money to weaken the Japanese yen right when the yen traditionally gets strong? Yeah. Seems a little foolish, right? So I don't know. Let's wait and then they give a new jolt. Yeah, yeah. We'll see. And I balk at that because the Japanese have a long history of being wrong on that decision. So I'd like for them to, because everyone's saying, they're out of recession. All right, they've been wrong probably what 3 times over the last 20 years in the exact same situation. Okay, so I don't know. We'll see. For example, I think jacking up taxes last year was a big mistake. So we'll see if the Japanese yen stays moderately strong for a while and they don't get amazing growth, then they're going to have to, step it up again, right? Turn the spigot on a little bit again, right? But nonetheless, the way I look at it is the US dollar hasn't been a very strong currency recently, right? Would you agree with that? Okay. But that doesn't mean it's a weak currency. I would expect the US dollar to get strong again sometime soon. Maybe this week, maybe next week, maybe next month. I don't know. I'm not in control of these things. Okay? And yet, if you look at this over the last since the middle of January, we're much more bullish than bearish. Much more bullish than bearish. Right? Huge pullback here, then consolidation, break out to the upside, pull back. Okay? Looks like a buying opportunity, in fact. So I would try to take myself out of the now and take a larger look at the picture and say, well, it's amazing because the dollar hasn't even been that strong. Okay. So if the dollar can get strong here, I think it will move the yen to the upside. The USD yen would go up. Okay. Maybe not today, maybe not tomorrow, maybe not this week. Okay. But eventually, right? Now, if we dropped all the way back to the bottom of this range, then I'd be heartbroken a bit, and then we would just go into a range trading, strategy. But what this looks like to me is a breakout, pullback, retracement, right? Role reversal. I think we start driving this up again. Okay. Okay. That's what I'm thinking. And that, we've had a pretty good move despite generally, not strong US dollar. And I do believe the dollar will get strong again. And then I'm thinking, maybe not in February, and maybe not even in March, but 6 or 7 or 8 weeks from now, mid-April, maybe the yen weakens a little bit again. Okay, because they'll be in a new fiscal year, and as Japanese investors, and corporations put their money to work, negative real interest rates, then they'll get the weak yen. Because remember, what's going to create the weak yen? Negative real interest rates. Well, how do you get negative real interest rates? You have to have inflation. So when they get inflation and they start telling you, oh, okay, the economy is doing good, yay, Well, that's actually bad for the Japanese yen. Okay? So we kind of want to see that. So we've been in this period for a while where quantitative easing and printing money weakened the yen. The next is where the yield on short-term investments is lower than inflation. Let me give you an example. The inflation target for Japan, 2%. You make an investment, you buy a bond, JGB, Japanese government bond, pays you 1%. So you're guaranteed your principal and you're guaranteed to earn 1%. But because of inflation being higher, it's eroded your purchasing power of your money. So by the time you get your money back, you've actually lost 1% in real terms. You might get all your principal back. You might even earn 1% interest on top of it. So you even got more money than you had before. The only thing is it buys less. So in real terms, you've actually lost money, even though you have more money than when you started with. The only thing is you can't convert it into more. You convert it into less. So in real terms, you've lost. So that's what Japan is facing. And guess what happens when you're guaranteed in real terms to lose money? Do you want to make the investment? No. If you're a multinational corporation, what do? Keep your money in Japan? Or just simply move it to a subsidiary where you're not guaranteed to lose money? Well, yeah, you got to get it out of Japan. What happens to the currency when there's a mass exodus out? It weakens. Yeah. Well, that's what I'm talking about, baby. So let's wait for tax season. When tax season ends and we start the new fiscal year, and inflation starts ticking up in Japan, then that's a good thing for us traders that want to dump the Japanese yen. Cool, right on. But again, is that going to happen tonight or today? No, but there's a trade here. I see a trade here. Set it up, knock it down, right? Cool. Speaking about yens, let's cover a few more. It's already been 45 minutes. Maybe I should save some of the yens for tomorrow. I just did it, Wyatt. Okay. Boop, boop. Nice. These are tricky. Can you see this when it makes a lower low, then a higher high? Don't you just hate that? Let's change the time. Okay, seems to me I would mark this up as resistance. Wait for a break. Okay, I'd have to mark this. Now remember, based on the RBA meeting minutes, we know Australia cut interest rates to an all-time low, but we found out that not everyone was completely on board with that, and that there are concerns in the discussions with the RBA meeting members, voting members of the RBA, that there are concerns about creating a real estate bubble in a place where real estate was already hot, but now interest rates are super low and there's nowhere else to put your money. Are they going to repeat America's mistake from the early 2000s? Excuse me. So what we're seeing is someone's taking advantage of the hesitation. That's all. Okay. So I would have it marked up like this if I were me, and maybe even a little higher to catch this, and essentially let it break out. So I'm not going to be aggressively bullish or bearish on the Aussie dollar right now. I can see why it's going up. I can see why it could come back down. And one of my jobs as a currency profiteer is really to find the easiest trade. We spend hours on this and get nowhere, or even worse, spend hours on it and lose money, where there might be easier trades somewhere else, right? So I don't necessarily want to get in a battle here. If it does break out, you can do like what just happened not long ago, which would have been the easier trade. See how it made the higher high, higher low? Cool. Well, what if it did it here? What if it made a higher high, higher low here? See, we're just not in that scenario right now, right? See how it made a higher high and then a higher low on the roll reversal? Might have been an interesting buy, on a small time frame. Are we there now? No. Okay. Is this rolling over and potentially be creating a sell opportunity? Yeah, it's a little early, but it came up, hit 90. Okay, fine. If you want to take it, set it up at a 5-minute chart. All right. So it hit 93, dropped, making a lower high, 5-minute Stokes cycle. Sure, okay. So as a scalper, you could set it up like this, right? Fine. Okay. But probably nothing, longer term. By longer term, I mean, I'd like to hold something for a couple of days, right? We're not quite set up for that right now. Maybe it has to do with the holiday weekend in the United States and stuff. So who knows? Just take it calm, right? Be conservative. Look for repeatable trades. Always ask yourself, are you a bull or a bear? And give yourself some reasons why, either using long-term technicals or fundamentals. Then ask yourself, what kind of market conditions are we in? Is it trending? If so, is it trending fast or is it trending slowly? Is it consolidating? Is it reversing? And then match up your expectations with those actual market conditions, right? So peace on earth, may the pips be with you, may your profits be above average. We'll go through the other yen pairs tomorrow, if that's okay. We've already gone almost an hour here, so I got to roll. Remember, if you like these sessions every day, please turn your demo account into a live account at tradersway.com. Also, this video is at youtube.com/C for channel/tradersway. And it's also on tradersway.com. So if you miss an event, you can always go back and watch video. Okay? I'll be here tomorrow, 7:30 a.m. Eastern Time. So I hope to see you tomorrow. Cheers.